Many traders don't lose because of the market. They lose because of their own ego. Feeling like they're the best, feeling their entry is always right, feeling the market must follow their analysis. The truth is, the market doesn't care who you are. The market doesn't know how many millions or billions you just lost, whether you're full margin or not, whether you need to recover today. The market only cares about structure. And here's the problem. When structure says wait, ego says go in now. In the market, traders don't lose because they lack indicators. They lose because they draw the wrong conclusions. On this channel, I don't teach you to guess the market. I teach you to read the logic behind price movement. Today, we're going to break down why this area is valid for a sell on XAUUSD. Not because of feeling, not because of indicators, but because the market structure is weak. If you sell just because the price looks high, that's not analysis, that's hope. If you want to learn trading by thinking, not by following the crowd, stay until the end. First, we look at the market objectively. At 44.09, the market previously formed a weak high. Why is it weak? The rise wasn't supported by strong impulse, no BOS securing the bullish structure, and the previous retracement was deep and aggressive. What does that mean? The bullish structure had no protection. Now pay attention to this key moment. Price successfully broke above the weak high at 44.09. Many traders see this as buy confirmation, but I didn't join the buy. Why? Because what got broken was a weak high. There was no continuation reaction securing the structure, and the market failed to hold above 44.09. A break of weak structure is not always valid. I was waiting for one thing, not price going up, but failing to continue up. When price breaks 44.09, loses momentum, and returns back into the previous range, that's where I enter sell. This entry automatically makes my entry price a new weak high, and that's intentional, because this high isn't protected by structure. There's no bullish BOS afterward, and the higher time frame structure hasn't changed. Many people misunderstand this. Bro, doesn't that make your entry the highest high? Yes, but a strong high needs confirmation, not just being the highest point. As long as there's no follow-up impulse, no higher low secured, and the market turns weak again, that high remains weak. Now about the TP, my target, the previous weak low that has already been broken. Why there? Because that weak low hasn't been reclaimed, the structure below hasn't been resolved, and the dominant direction is still bearish. The market rarely stops in the middle of a weak structure. What if the market suddenly rallies strongly? That means there's a bullish BOS, structure changes, and this analysis is invalid. KD flow doesn't aim to be right all the time. We look for setups with clear risk. This sell is not because the price is expensive, but because the break of weak structure failed to get confirmation. If you want to level up as a trader, stop chasing direction. Start understanding structure quality. And for those of you who seriously want to learn logical trading, subscribe to the KD Flow channel now. Here, I consistently break down how to read weak and strong structures, entries based on market logic, and trader mindset for long-term survival. No signals, no promises of quick profits, just education that makes you truly understand the market. Subscribe and turn on the bell, so every time there's a new structure breakdown, you won't miss the thinking process. This is KD Flow, pure structure, pure logic. See you guys.